Well, from the Silver Oracle of Delphi, I'm going to give you some reasons why that definitely you're going to see the broad general equities crash like crazy, guaranteed. Maybe not right away, but there's almost guaranteed ironclad reason. There's a couple indicators, like I know, like the last time the markets crashed, it preceded this huge drop in the oil and the commodities, and also I mentioned that the underlying health of the economy is bad when the commodities are down. I'm not playing doom and gloom. I'm telling you absolutely hardcore economic facts. I'm not giving you any kind of drama or anything like that or anti-USA propaganda. And I also want to mention here, because, it looks like, the situation is very volatile with silver. It's like we saw this massive drop to the 14s overnight. Then it had this huge spike. Same with the massive drop with the oil. Then it had a huge spike, but they're still way down, right? And I admit that I only expected silver to retrace to about half. I was on, I sure as heck didn't get it down to like this low. I didn't think it was going to be this low. But I was one of the few people that said it was going to go solidly below 26, and I was maintaining that for a long time. But I didn't think it was even going to go down to 18, for crying out loud. And when I hit 18, I figured that was it. But that's silver, such is life. But the thing is, you do not put all your money into silver. You do not recognize losses until you sell, and similarly, you do not recognize gains until you sell. So, silver's always been the devil's metal, so it's been a fire-breathing thing. But let me put it to you this way. There's a lot of things that are going on in the economy. I know we got a lot of problems in the economy, and I guess one of the solutions is tax weed so you can fund the schools, right? And nobody's thinking outside the box. Now, I'm not going to give you a recommendation here as to what to do with your money, but if I was a real betting man, which I'm not, I'm a cautious person. I just, I put some money here and there, and I don't really, I play pretty damn cautious. If I was a betting man, I'd be shorting the hell out of the markets right now, but I'm not a betting man, and I'm not telling you to do that. But you'll probably see in retrospect that that's going to be a winning play. Like George Soros is losing out on a large portion of his bearish bet. He's probably getting a little sideways on that deal like the old black cat here is, But he's still got two-thirds. He did a huge bearish bet in August 2013. That's expiring right about now or real soon. Or maybe it has expired. But he added greatly to the position in early 2014 and also August 2014. So, he'll more than make up for the problem he had, because, even Soros doesn't get everything 100% right. Actually, if you look at the history of even Jim Rogers, his partner in the Quantum Fund, Jim Rogers made a whole hell of a lot of money early on, and then he lost his ass on every damn thing, and he kind of learned to be more cautious. So, I play a little more cautious. I'm not going to, if you knew every damn thing, you'd be a gazillionaire inside of a year, even if you started with $100. So I played a little more cautious. It's a poker game, man. It's a poker game. You don't bet all your cards at once. But just to get on, I just want to mention before I get on to the reason why the markets are guaranteed to crash. It's like simple 101. But before I get on to that, because I'm not a person that's knocking the United States and cheering on Vladimir Putin, because I want to tell you another thing with this deal with this guy Vladimir Putin. They've been having an exodus out of the country of some of the smartest people going in Russia. They're having a major brain drain in Russia. The smartest people in Russia are just leaving the country. Even this is going on with China. There's been like more millionaires newly devised, new millionaires in China leaving the country. Where do they go? To the USA. Or that's one of the biggest destinations, right? It's not the only destination. But, people in the West are so quick to criticize over here. Even I know there's a bunch of problems over here. I mean, I'm not telling you the grass is green all the time and all that type of stuff, and I'm not waving a flag, and I do want the bad guys ousted that are over here in the United States. But I'm just telling you that there's a hell of a lot worse problems going on the other side of the world. Actually, during Putin's third term, he had a record number of people leaving the country. He had 76% more exited from applying for asylum in 2013 than there was in 2012. 76% more. Getting the hell out. But the biggest bombshell is that since April 2014, a month after Russia annexed Crimea, they had many times more, actually not many times more, but way more percentage more, wanting to leave the country. So, since Russia annexed Crimea, there's been a major exodus of Russians getting the hell out of that place. I mean, the smart Russians. Not the ones that are kind of stuck there to the land, tilling the land. So, I'm going to tell you this deal, man. The Russians are kind of like in chains, you know what I mean? Like the model here. So, anyway, let me get on to the reason why the markets are guaranteed to go down. And this is why, even like back in 2008, the drastic dropping of oil prices preceded the market crash. You see, the financials are not out for the energy sector. And what it's going to be is basically for the energy sector just buried. But you don't know it yet. In other words, when you look at like say for instance, people are familiar with the stocks on the the equities on the miners, right? As a matter of fact, when the silver and let's even say silver, but silver, copper, gold, platinum, zinc, lead, whatever, copper are all going down. The miners go down even faster percentage. Similarly, on the way up, the miners go way the hell up faster. So in other words, if you get, it's a very volatile, risky thing to be in, but in oil, it's 25% of energy, not just oil, but just energy, which is across the broad-based everything, natural gas, the whole deal. It's 25% of the S&P and research and development. So, in other words, the markets are basically dead, but they don't know it yet. They're not going to know it until the financials come out later on. Because it's going to show. What do you think is going to show on the bottom line on all the companies that are in the energy sector now that the price of oil and all the commodities are this depressed? They're not making any money. Just like Russia's not making any money, but 25% of now Russia's case, that's 2/3 of their money they get from foreign cash. So, I mean, it's really hurting them. But in the case of the USA, the S&P, well, the S&P is actually, I know it's really a lot of it's foreign, but let's just say it's the USA too, because actually now the Texas shale oil and also the Bakken shale oil reserve in North Dakota are now definitely in the red. Definitely. That's not everywhere is in the red. Some places can go all the way down to 50, but most of the shale oil in the USA at these oil prices are now in the red. That's a major portion of the S&P. What do you think's going to happen with the stocks when the next financial reports come out? They're going to see it. They're going to see the earnings are down, and what's going to happen with the stocks? The investors are going to pull out. The smart ones are they're already pulling out. They're shorting or whatever they're doing. Actually, probably if you're a betting person, I'm not telling you to do this, but if you short at the markets, you probably, if you had some kind of short for the next year on the S&P, you probably make out like a fat rat. But I don't want to, I'm not going to tell people what to do over here exactly. So I'm just giving you information as to how the information really works in the real financial world. Like if you walked into a boutique investment house, and there is with the firm I work with, there is I use common sense on a lot of things, and I play cautious. I already noticed silver's going to make out like a fat rat. It is. If Obama was not in office, or he was removed from office, or his hand was forced, the whole Oracle of Delphi would be pointing in a different direction. The thing is that, when Israel was ready to strike Iran, if you probably don't even remember all this stuff, but Israel was ready to strike Iran, they were going to use airfields just north of Iran It's a country that's, I forgot what the country is again, but Israel was ratted out by the Obama administration. If Israel struck Iran, oil prices would have went up, and silver and gold would have spiked like crazy. They may not have stayed up there, but I was expecting a mini spike before the huge spike. But in any situation, the thing is, we got a lot more problems coming up in the Middle East due to Obama's inactions and screwed up policies. So, whatever happens in the Middle East, it's probably going to be a gazillion times worse. And even if the United States isn't involved at all, there's going to be a major confrontation between the Sunnis and the Shiites, and all that oil is going to be off the freaking global market. Oil is going to go through the roof. Gold is going to go way the hell up, and silver is going to go up during that time. If you look at when silver really super spikes, it's when oil super spikes. There's no really correlation between silver and oil, except when oil super spikes. And what causes oil to super spike? Major conflict in the Middle East. It's not the, it's not the, what do you call it? The damn, the freaking, the QE and all that type of stuff. It's not really that. You know what I mean? It's not really that. It's what it causes that. What causes really oil to super spike when you see the biggest jumps in oil, like when just 1 or 2% was taken off the market when Libya was struck. What happened? What happened? What happened? It basically was because of, oil being taken off the market and what did it cause the price of oils to go up to? 120 something a barrel, and that's when we had silver go up to 48. You would think a normal retracement would be to 24. That would be a hard retracement. I didn't even think it was. I thought it was going to go a little above 50, not much. I didn't think it was going to get 100. But back then, everybody was predicting 100. How many people were predicting 500 back then? Gazillion, right? So on the way down, it goes down even more. That's how silver is. But, it looks like the situation is, it's going to radically change because what's going to happen, though, eventually a bomb is going to be gone. Even if I almost think Hillary's going to be in because of Jeb Bush is going to run against her. Nobody's going to. And it's the wrong candidate to run against her. I mean, how many freaking times you can have a Bush and freaking as president? He's going to lose, man. And maybe it's the way it's supposed to be. But Hillary's going to be a big oil freaking warmonger president. And you're probably going to see your damn silver go way the hell up. So, but it's guaranteed that the markets are going to go down. There's no doubt about it. No doubt. Guaranteed, man. Guaranteed that the markets are going to crash big time, because oil is not making the money. It's not pulling in the revenue. Everybody's in the red. Energy sector is 25% of the freaking S&P. What do you think's going to happen? What do you think's going to happen to what do you think the shareholder? It's a no-brainer, man. It's a no-brainer. But so you have to wait till the next reporting comes out. So maybe like January. Maybe January will be it. Maybe oil might recover a little bit in price by then because of the winter, but it's still going to be low enough, and it's also low enough right now that it's already affecting their earnings a lot. So the next financial reportings that come out in January for the end of the year, for the last quarter and all that stuff, it's going to be down for 25% of the S&P. So what do you think that's going to do? Right? It doesn't mean it's going to crash the hell out, but that could be the beginning of that's the beginning of how things happen. That's when they start, So anyway, it's just, I'm not even giving you like a secret thing here. It's just, that's just how the markets are, man. And a real indication of the underlying health of the USA economy is the commodities. If the commodities are down, that means there's not freaking a lot of demand for industrial goods, in the metals area and whatever, So, I mean, that's telling you the productivity's down. And I already mentioned this before, but I have to repeat it again. The growth in the inflation and the GDP since the crash in 2000, I guess it was early 2009 was the actual bottom there. The growth of inflation and the GDP has only been 22%. But at the same time, the markets have went up like 156 or 100 more than 156% now as we speak, because they're going up even more. So, and you know, just to look at oil again. Oil is at 67. It dropped a couple bucks today. It's all over the place, man. And the Dow's going up. So what do you think's going to happen when the energy sector reports? You know, the mining sector is pretty minor, but the energy sector is huge in the S&P. The mining sector is not that freaking big. The silver sector and the gold sector, it's not that big. You know, the platinum and palladium sector is like a joke. There's hardly nothing in there. But the energy sector, when they report at the January for the end of the year, the fourth quarter, and also fiscal year 2014, it's going to look bleak. And what is the investors going to do? They say, see ya, man. So that's when all hell's going to break loose, man. It's going to start. So, like I said, the markets are only being pumped up by the Federal Reserve, basically shoring it up. It's the only time in the history of the USA that's has happened. And I think there's a method to the madness. They're going to go after, when they bail out, like say maybe JP, in other words, these big, JP Morgan and Goldman, they have huge derivatives exposure. If there's a major problem, the government's going to have to step in. And that means they're going to be major shareholder in these entities, which means they're going to be more or less controlling your retirement accounts unless you have physical metals. So, what can I tell you, man? I mean, there's always a way around a thing. Tax weed, fund the schools. If they freaking made weed legal everywhere and they taxed it, there'd probably be like plenty of money, man. I mean, they wouldn't get any money from me because I don't smoke any weed, but there's a lot of people that do. So, anyway, so just giving you Common 101 because, and what is it now? It's December 2nd. So, you only got to wait about 5 weeks until all the reports come in for the energy sector. We'll see how they come out. They're not going to look rosy, I'll guarantee you that, man. They're going to look bad, man. The cat is freaking laying on its side right now. It's like saying, ooh, boy, them numbers don't look right. Those numbers don't look right. Time to get out of this energy sector. There's going to be a mass exodus. Just like the mass exodus coming out of Russia after the Crimea. It's pretty interesting. Like, he had, under Putin, it's like it says, I'm not... this is what disgusts me about the freaking alternative media, per se. They're always freaking down in the United States and cheering on Russia and Vladimir Putin. I'm like, I got problems with some of the stuff that's going on in the United States, but I'm not cheering on Vladimir Putin, man. It's like Russians, the smartest Russians, are getting the hell out of there, man. They've been applying for asylum like crazy. The numbers have been going up 2012 to 2013, and since April of 2014, a month after Russia annexed Crimea, 203,659 Russians have left Russia, which is more than they had in 2013, when 2013 was more than 2012. I mean, man, I don't know, man. I mean, Gerald Celente ought to live there. Mike Rivero, man, they ought to stay there, man. They could be chained up, indentured servants to Putin, whatever. I mean, come on, man, come on. But anyway, it's not going to be, forever wait. Like I said, you just, the only danger you have with commodities if you got leverage and that erodes fast. But if you got coins, you're not going to have a problem. You're not going to have a problem. And, coins aren't the only investment in the world. I mean, come on. I'm putting down here about silver, but I'm telling you that it's if you invested in, I did one of the stocks on one of the weeds. What the hell was it? Hemp Inc. Man, I made like 800% one time. It was like a year ago. So, it's like a quick in and out because, I don't know, if Obama did something or whatever the hell it was. So, I mean, there's a lot of investments out there, but I'm just telling you, if there's a major financial collapse, silver coins is the way to go. Silver coins is the way to go. And if there's a major financial collapse, it's going to be like food, firepower, and fuel. and it's going to actually be more important than silver. So you should be thinking across all areas, not just one thing, because otherwise you will be just buried if you don't have food, fuel, and firepower. It's very important that you have those things before you even have silver coins. So anyway, there's a lot of factors going on. So, from the Oracle of Delphi, I'm going to tell you right now, it's a guarantee that the markets are going to crash. Guaranteed. There's no doubt about it. No doubt about it at all.